Hi everyone, welcome to another Weekly Forex Forecast for the week ending November 13th, 2020. My name is Justin Bennett with Daily Price Action, and in today's forecast we're going to talk about the EURUSD, the Pound USD, the Dollar Yen, as well as the New Zealand Dollar versus the US Dollar. And we're going to wrap things up with gold or XAUUSD. We finally have some markets on the move, including the EURUSD and the Dollar Yen, and gold is finally breaking out of consolidation that we've seen for the last few months. So we're going to talk about all of that and more in today's video, so let's get to it right now. A quick disclaimer that today's video is for educational purposes only. All views are my opinion and are not intended as investment advice. Forex is a high reward, high risk business, and you should not trade with borrowed money or money you cannot afford to lose. See the description of this video for the full disclaimer. So first up, we have the EURUSD, and I talked about this on Friday where we have this potential breakout from a short-term trend line that extends from the year-to-date high. All right, so we can see that Friday did close above this trend line, and furthermore, it also looks to have cleared some of these recent highs back here. Now, I do think that 118.80 could produce some selling pressure this week, so we could see a rotation lower. I'm not sure if we'll get a rotation all the way back into this trend line, but we could see some weakness early this week before we get that push up into the 119.50/70 area. But even though it did break out of this trend line isn't the strongest that I've seen. And furthermore, as I mentioned a week ago, it's going to take a close above this 119.50/70 area for the EURUSD to break out. Notice how it's been trending sideways in this range between 116.15 and 119.50/70 for the last few months. So until the EURUSD clears this area up here, expect this range to continue. However, it does look like we could get some continuation based on the weekly time frame, which last week produced a bullish outside week. Notice how this candle here engulfs the previous one, and that could be a signal that the EURUSD is ready to head higher. Now, how much higher? If we look at the monthly time frame, I still like the idea of a push into 125, and that could happen earlier than I originally expected if we do get this melt up phase for risk on assets like the EURUSD. So 125 is this high back here. It's also the 38.2% Fibonacci retracement of this range right through here. All right, so 125 is going to be key if we do see a continuation of the EURUSD above that 119.50/70 area. Alternatively, if the EURUSD closes back below this trend line this week and this breakout fails, we could see it return to 116.15. However, given the price action here last week, I do expect buyers to come out and defend that 118.25 area in the coming week. The pound versus the US dollar is next, and as you can see, I mentioned this trend line a few times in recent weeks, and we did see a bounce right from that trend line support. So this May trend line was the one that was holding this uptrend intact. However, we still need to see a close above this high back here, and furthermore that 132.60 area. Notice how it was resistance through this area here and then turned to support for a few candles through this area. But ideally, we need to see a break of this high up here because as I mentioned a couple of weeks ago, we had this high back here, we then had a higher high, and so far after this retest of trendline support, we've yet to see a higher high from the pair. And the pair is also still at risk of this being the first lower high in this series. So the pound needs to take out a few levels in order to turn truly bullish, but we are seeing a bounce from that trend line. So as long as this trend line support is intact, this uptrend is also intact. However, if you are going to short the US dollar, I think there are better avenues out there, including the EURUSD and also the New Zealand dollar, which we'll get to later in this video. The dollar yen has finally given us that downside pressure that I've been looking for the last few months. So ever since we had this breakout of this symmetrical triangle on the monthly time frame, so notice how this trend line up here extends from these highs, and this pattern was always respected on the monthly chart. So notice how back here in July, we finally got that close below this support level, and then 106 to 106.50 became resistance. So the idea of a push into 101 was always my preferred choice as long as we were below that area around 106.50. Notice how 101 was resistance back here. It then flipped to support and also support on this candle recently. Now, if we move over to the daily time frame, this is something that I talked about a few weeks ago where we had this small rising wedge that formed based on this trend line here off of the year-to-date low. And then we also have this very short-term trend line right here. We got a breakdown and I was talking about a short through this area down toward 104.20. So that was a 150 pip target. It was reached last month through here, and then last week we finally got a close below that 104.20 area. Notice how significant 104.20 has been over the last few months. So as long as 104.20 is intact as resistance going forward on a daily closing basis, I like the idea of a push into that 101 region. Now, of course, if the dollar yen were to close the day back above 104.20, that could indicate that this down here was a false break. But as of now, the downward pressure is intact. We've had lower highs ever since February, and until the dollar yen takes out one of these highs to carve the first higher high, this downtrend is intact. So in summary, as long as the dollar yen is below 104.20 on a daily closing basis, I like the idea of a push into 101. If the dollar yen closes the day back above 104.20, the idea would be negated and the dollar yen could trend higher. The New Zealand dollar looks ready to push higher after retesting that 67.90 area on Friday. So recently, a few weeks ago, I talked about the potential for this to be a head and shoulders. However, one thing I said in that post is that I did not like the idea of it being a head and shoulders, and instead I thought that the New Zealand dollar was ready to break above 67.90 and trend even higher. And the reason I thought that is if we look at the monthly time frame, it's very similar to the EURUSD, only in this case we had a false break recently earlier this year below this 20-year trend line. So this break back here in March, this ended up being a false break. This monthly close right here confirmed that this was a false break. And if you know anything about false breaks, they tend to trigger an extended move in the opposite direction. That means that the New Zealand dollar was always likely to continue pushing higher over the coming weeks and months. And sure enough, we're getting that continuation now, where if you look at this range, 67.90 is the level to break. So if we do get a daily close above 67.90 this week, that would expose higher levels, including the 69.40 area followed by 71.60. And just like the EURUSD, I do have a longer term target, and that's going to be 75. So I do think that the New Zealand dollar has every chance of getting up here to 75, which is these highs back here in 2021. And that's all because of this false break back here, which again, false breaks like this, and mind you, this was a 20-year level. So this was a big false break on the monthly time frame, and that's likely to continue to push the New Zealand dollar higher, perhaps all the way up to 75. But first, buyers have to get through that 67.90 level this week in order to expose 69.40 followed by 71.60. Otherwise, if we do see a rotation lower, look for support to come in around the 65 handle. We saw gold or XAUUSD break out last week. This is something I've talked about for the last few weeks where the pair needed to carve a first higher high within this series in order to break out. So you can see how 1930, this was the previous high back here, and we've had lower highs ever since this 2075 top up here. However, last week carved that first higher high, so now it's a matter of seeing 1930 serve as support to push XAUUSD higher, perhaps back toward 2015 and 2075. Now, I've liked gold higher over the next few years for quite a long time, and I think that's still intact here. But in the short term, it's all about 1930 and this level holding as support. If it doesn't, we could see gold enter this range again and even trend back toward 1850. However, even if it does, I still like gold higher as long as it's above 1790 on the monthly time frame. Notice how back here in 2011 and 2012, 1790 was a key factor. So as long as this area is intact as support, I like gold higher over the long term. But flipping back to the daily time frame, again, it's all about 1930 this week. Look for buying pressure through that area for a push up into 2015 and perhaps 2075 over the next few weeks. If you enjoyed this video, give it a thumbs up, leave your comment below, and be sure to subscribe to my channel. See you next time.